a roller coaster of some sort. So what I'm going to do is give you a very quick overview of the usual presentation that many of you are familiar about the past, where we first take a quick pulse of the continent in the looking at near-term macroeconomic outlook. And then we will talk about a topic that is actually very important to all of us, I'm sure to all your countries, which is a bedrock and foundational issue about some of the challenges that the continent faces, and that is governance and delivering services for the people. So just on near-term macroeconomic outlook, the good news is, of course, that the region continues to have positive growth, right? So since the rebound in 2023, we see that, in fact, the outlook is positive. This year, we are projecting growth to be about 3.5% for Sub-Saharan Africa. And we expect it to accelerate to a bit around 4.3% in the next couple of years. Now, there are lots of caveats around this, but at least this is what we are now focusing. The main drivers of this remains the same for the last couple of years at least, which is that inflation has been under control. So it's private consumption that's driving this. There's a slight recovery in investments. And then, of course, on the production side, it's mostly services, right? Tourism is returning to a lot of these countries. Transport services are recovering, financial services and retail are recovering, and so on and so on, right? So it's mostly services, a little bit of agriculture for countries that were facing a drought, but are now getting a bit of rain and therefore recovering. But the driver is mostly services. Having said that, the region, of course, is diverse, right? So as you can see here, we have multiple speeds of growth in the region. I mean, on the left-hand side, on the extreme left-hand side, you can see the big economies in Africa, Nigeria, South Africa, and Angola. Now, the black dots suggest what, on average, these countries have been growing at in the first 20 years of this century, right? 2000 to 2019. And in the big economies are growing way below their potential. On average, we are projecting that maybe they're growing at 2.7, the three of them combined. That's primarily because South Africa is actually growing at about 1%, Nigeria about 3.5, maybe at the regional average. But South Africa is a big economy, so it's dragging down that average. Now, the rest of Sub-Saharan Africa, excluding those three countries, is actually growing at around 4.6%. And we expect them to grow at 5.7% in the next couple of years, excluding those two countries. And if those three countries actually recover faster, it would be even higher than what we're projecting. The main growth drivers appear to be these countries that are on the extreme right-hand side, which is non-resource-rich countries that are not fragile. So they tend to be a cluster of countries around Eastern Africa, as well as smaller economies in West Africa, Senegal, Cote d'Ivoire, Benin, Togo, and so on, right? So this is where most of the growth is coming from. And a lot of these countries are relatively diverse. The economies are mostly service-oriented and so on. Now, so I've mentioned that inflation is a major reason why these countries are recovering. Median inflation is going to be below 5% for most countries. That doesn't mean that all the countries have actually won this battle. Unfortunately, there are still major economies in Africa where inflation rates are in double digits, right? So these are, among the top economies, this will be Ethiopia, it will be, Ghana, it will be Nigeria, where inflation rates are still, so we're talking about a dozen or so countries where inflation is really in double digits. So there, the battle has not been won. But for most part, inflation is actually down to about, less than 5%. And that is important because hopefully what that means is, I'll skip this. Inflation is it's mostly, it was mostly driven by, currencies that were under a lot of pressure, and of course food and fuel, but those things are now stable. But I think what I want to say is that, now that inflation is coming down, you're beginning to see a divergence in terms of what central bankers are doing, right? So monetary policy is beginning to ease for some countries. It continues to be tight for some others. Right? For high inflation countries, it's obviously tight, has to be tight. But for low inflation countries, it's beginning to ease. That will be good because that might mean that, in fact, we may begin to see, more credit flowing to both consumers and businesses, and that will probably, hopefully, will add to the momentum of, consumption-driven growth by bringing in investments. So that's the hope, and we'll have to keep watching this to see how this evolves. Now, the other good thing the other kind of mixed outcome that's happening is the fact that African governments continue to do, some Herculean task, actually trying to maintain some level of fiscal consolidation under incredibly difficult circumstances, right? So you can see the primary balances, which is the red bars, have been coming down since 2020, right? This is the COVID year, and they're almost at zero by, and by 2026, we expect them to basically balance. The problem and the challenge remains interest payments, right? So the interest payments continue to be a huge obstacle to actually achieving these fiscal consolidation efforts. And that's the green bar. So even though for primary balance, which is just revenues minus spending, tax revenues minus spending, excluding interest payments, is almost balanced. You can see when you add in, interest payments that, fiscal balances are still somewhere hovering around 4% of GDP, which is excessive if you really think about it. So this is where, most of the challenge remains, really how to, undo a lot of this expensive debt, lower the interest payments and interest costs, and then free up a lot of these resources for core development. So that remains a challenge, and fortunately, these countries continue to remain on track to do it. But it has been a slow slog and process. I mentioned this, so you can see this debt has been rising, and it is stabilizing, but it is stabilizing at a much higher rate. Unfortunately, what's happening at the same time that this is going on, right? So debt is rising, stabilizing at a much higher rate. Debt servicing is really, really, taking up a lot of resources. But in the meantime, so I can't see need to move this. Okay. Sorry. In the meantime, on the right-hand side, what you're beginning to see is that, net flows of resources, whether that is debt or grants or whatever it is, or even just lending from has really declined a lot. And a lot of that decline is coming from two major sources of financing in the past. That's Eurobonds, so that's the green bars. You can see that have literally disappeared. And the red bars, which is China, right? So, China's, loans and credits have basically come to almost a complete halt. And so have Eurobonds. So, these countries are now really basically they don't have access to this international financial markets. What has happened is that instead, multilateral, such as the World Bank, the African Development Bank, IMF, those are the organizations that have stepped up to try and provide the gap in financing. But it's not nearly enough because, as you can see, back in 2019, for example, right, something like $40 billion annually was flowing into these countries, but now it's down to maybe barely 20, for investments and so on. So that's the situation. That's the situation in terms of financing development. So which is very tight and is very difficult at the moment. Now, so even though the picture is mixed, right? So some positive development on the head in terms of growth, in terms of inflation, in terms of fiscal balances becoming a little bit stable, but still really onerous. What we know for sure is that this is all happening under incredible period of uncertainty, right? And this uncertainty is both on the economic policy side and also on the trade side, particularly on the trade side, because that's the one that has been in the news recently, right? And continues to be dominating the news. And you can see these two graphs, right? The black is the global economic policy uncertainty index, and the red is the trade policy uncertainty index, right? And it keeps changing, right? So we don't really know where this is headed and how it's going to end up. But it is clearly one of those incredibly disruptive developments in recent months. Now, for the most part, so what we've done is, as you can, if I go back here, our forecast for the growth for 2025 before these trade disruptions were 3.7%, right? We've kind of knocked it down by 0.2 percentage points, and that's because direct effects of trade and those tariffs that were announced are not going to be really large for Africa, right? So Africa doesn't really trade very much with the United States. Only about, I think, 5% of African exports actually come to the United States. And remember, the tariffs excluded a whole bunch of products, right? It kind of exempted a whole bunch of products like oil and gas, some rare minerals such as nickel and so on. So if you take the totality of that, it just meant that in fact, the direct hits on African economies is going to be minimal. However, the indirect is going to be very large. So you can see, for example, the main trading partners for Africa, right? The US is only about 4.6% of African exports, right? The destination is on the left-hand side. You can see, where African exports are going, right? The United States 4.6%, China is 16%, European Union is 21%, and the rest of the world is like 37%, right? And within Sub-Saharan Africa is 21%, right? So this is why the direct effects of these tariffs are just not going to be that large. But the indirect effects are large. They're likely to be, we focus them to be likely large, because what will happen is that if in fact global growth slows down, right, African exports to places like European Union, to the rest of the world, to China will slow down. Investment flows from those countries will slow down. Inflation could rise, right? Because if in fact the tariffs that were announced in the US lead to higher levels of prices, the Fed will almost certainly act and raise interest rates. And we know what happened last time that happened, right? That wasn't too long ago. It was a couple of years ago. It took 2 years to actually unwind all that. So we know that in fact, what will happen, most likely what will happen is that there will be a flight to safety to the dollar, and that will put a lot of pressure on African currencies, and therefore will actually lead to inflation. It will lead to inflation in our own countries, which will then create all these like negative cycle and so on and so on. Anyway, so that is the concern about the indirect effects of these tariffs. And even though there is the volume of exports to the United States is low, specific countries and specific products are going to be hit very hard, right? So we shouldn't forget that. So some of these countries that are intensive users of certain trade agreements with the United States. So, a lot of these small countries that have really broken into, exports of textiles and garments, those might be hit hard. Certain products, industries might be hit hard. So we show here that in fact, products like footwear, hides and skins, animal products, textiles and clothing, those ones are likely to be hit hard because the tariff gap between them and the US is pretty large. So if the reciprocal tariffs are imposed, then the good news is that those things have so far been suspended for at least the next 90 days. We don't know where this will land. So we'll have to just keep watching this space and see. Okay. The other, of course, shock has been aid cuts. And we had, last month, we had a conversation. Was it last month? The month before, was it April or March? In March, we had a roundtable having this conversation. And we had from all of you about what is happening in your own countries. And here we just show, an illustrative example of what we think is happening, right? Again, there are going to be some countries that are going to be hit very hard, and a whole lot who will not be hit very hard by the U.S. The cut in U.S. aid, right? And what we actually are beginning to find out is that a lot of the U.S. aid for many countries have been off budget, right? It hasn't really been something that is reflected in the government budgets, right? It's mostly done through NGOs or through certain, other non-governmental organizations or civil society organizations. And so a lot of countries may not even be aware how much of this problem actually exists within their own countries. They're beginning to actually do this. But what we know for sure, we know for sure about two things. One is that health is going to be one of those sectors that are going to be hit very hard because I think, as you all are aware, the American government is a major financier of these antiretroviral drugs for AIDS patients. And secondly, the US government is also one of the major funders of humanitarian aid. So those two sectors are going to be affected badly and by a lot. And those are two sectors that actually, unfortunately, also happen to have the largest concentration of people who are supported by this aid and are very vulnerable. Refugee camps, displaced populations, and so on and so on, right? So that's an unfortunate development. Second, a lot of these other sectors like education, water, may not, the recurrent costs may not be affected, but capital costs tend to be financed by donors, right? So even though we're showing here the US cut, even though we're talking here a lot about the US cut, a lot of other countries are actually thinking about cutting aid. So I think that what we've known about aid for the last, 5 or so decades is almost certainly going to change going forward. And I think we need to be aware and we need to be prepared for that. So this is something in some ways that is sudden, unexpectedly sudden. It's not a slow transition out of aid, but now that it is here, I don't think that it's going to come back. And so we really need to be prepared to thinking about alternative ways of financing these sectors that have been heavily financed by aid. And then, of course, one of the other downside issues one of the other risks that we are almost concerned about is the fact that, shocks in Africa continue to rise, especially on conflict, but also increasingly droughts and floods that have become more frequent. You can see, for example, the last 5 years, 2020 to 2024, have been, on average, people affected by these events have been much, much higher. The number of people affected have been, or rather, the percent of the population are much higher than the previous decade or so. But that's not something that you're not aware of. Okay, so that's the simple summary of the near-term macroeconomic outlook, right? Some positive developments in terms of growth, inflation, huge uncertainty when it comes to trade, global developments, and then continued persistence of these shocks that just seems to have a downdrift on growth as for the region. Okay, so that's what we have now. I think the other point that we wanted to make in this report is that even though African countries are growing, even though they've had success when it comes to issues around inflation, even though they appear to be holding ground when it comes to fiscal balances, and even though despite the trade, things have, the bottom hasn't fallen off. Despite all that, there is a lot of dissatisfaction in the region, right? And you can see the evidence in the level of the number of protests. Okay, you can see the evidence in the number of protests. So most of the protests are peaceful, fortunately, and we hope they remain that way. But they have really, really ratcheted up. And you can see on the left-hand side, peaceful protests have, in the last decade, increased by more than 6 times. Okay. The levels of trust of big, important government institutions is collapsing, right? So you can see on the right-hand side, trust in the army remains relatively high, surprisingly, but trust in police is collapsed, and so has trust in the presidency, right? So you get a lot of distrust, a lot of protests, you have military coups, you get militarization of politics, you get extremism of all kinds, right? So these are all signs of discontent. And part of the reason is because this growth, even though it's positive, is actually really weak and is not helping improve people's welfare. So GDP per capita performance is really weak and poor. And it is especially negative for a lot of poor, fragile, resource-rich countries. The only countries that are remotely recovering, even just barely, are the non-resource-rich and non-fragile countries. Okay, and of course, people see this in their own levels of well-being, and poverty levels are rising. I mean, the number of poor is rising. Poverty rates are peaking this year. Hopefully, they'll start coming down, but slowly. But the number of poor continues to rise. It's now up to almost 580 plus million people who are living below the extreme poverty line, right? So this is what people are feeling, right? In their lived experiences, they don't see jobs that are meaningful. They see lots of, they see that, their incomes are not rising at all, or stagnant or declining in many places. And they see, they're getting stuck in poverty, right? So this is why you see these levels of dissatisfaction, right? So what do we say? We say that, in fact, this is partly because these countries are misgoverned. And the way to try and reverse this situation is to try and provide better public services through fairer taxation and provide opportunity. So this is what, I think that's what African citizens are clamoring for, right? What are they asking their governments to do? 2 things. One is deliver services, okay? Basic services, education, health, water that is clean, energy that is cheap and abundant and available, and so on, right? So that's one thing they want. The other thing that they actually want is jobs or just opportunities for, having meaningful livelihoods, right? So what we're making a case for in the report, so you should pick up the report if you haven't read it already, is really how the government can deliver these two things. Okay, so let's take the first one. Here's one reason why African citizens are very unhappy. So if you look at the right-hand side, that's the level of taxation on average that African countries collect, right? Relative to the GDP. So it's roughly about 14%, 13, 14%, thereabouts, right? And you can see that it is, roughly the same as what countries in South Asia are collecting, slightly higher what Middle East and North African countries are collecting. Now it's much lower than what countries in Latin America or East Asia are collecting. But if you look on the left-hand side, right, the levels of services that these African citizens are buying with that level of taxation is much lower than the countries that are collecting roughly the same amount of taxes as relative to GDP. So you can see that when it comes to education, when it comes to water, when it comes to electricity, when it comes to sanitation, African countries are lagging behind everywhere on all those things relative to the countries in other regions of the world that are collecting roughly the same. So there is a sense that they're not getting value for money. So that's one source of, I guess, the anger and the frustration. The second is just that African countries appear to be relatively less effective in delivering services, right? So I guess you could say state capabilities are weaker. And you can see, for example, on the left-hand side, government effectiveness in Africa versus the rest of the world, right? And it's much lower than all the other regions, hasn't changed in almost a decade. Okay? And you can also tell that, in fact, African citizens, when you ask them the level of confidence in the fiscal system, in the way in which the taxes that are collected are used and the effectiveness of delivering on the basis of those taxes, they have very little, their attitude is almost entirely negative, right? They believe tax officials are corrupt. They believe that compatriots avoid paying taxes. Their attitude towards a fiscal contract where they get better services but pay higher taxes is split between those who say no and those who say yes, and so on and so on and so on, right? So you can see on the right-hand side a lot of distrust. And the tax systems are felt to be unfair, right? So you can see on the left-hand side, this is the tall bar is the overall tax revenue, but the illicit financial flows are almost a fifth of overall tax collection, right? And the unfairness comes in the sense that who are most likely responsible for all these illicit financial flows? Probably most likely to be elites who are basically trying to, siphon off these resources and therefore depriving the country, these countries of genuine revenues. And in most cases, these taxes, not only is there a lot of illicit, therefore hidden taxes, but there's also a lot of a lot of these taxes are also happen to be regressive, and that's what on the right-hand side we show, right? So so when it comes to issues around service delivery, the region doesn't get value for money. Okay, so that's the first thing. The governments are not effective in delivering services, even with the taxes they collect, right? There seems to be a lot of inefficiencies. And then the tax regime is seen to be actually both regressive and regressive and therefore unfair. Okay? So that's on the service delivery side. On the opportunity side, there is just so much involvement of the state in the economy, right? So this graph shows you how many, how individuals actually feel, or rather the equality of individuals in participating in the state procurement processes, public-private partnerships, all kinds of state opportunities that the state usually provides in the economic space, right? And so this shows you the level of socioeconomic status, the socioeconomic status of people who participate in this stuff. The lighter the color, right, the less equal availability of state business opportunities, right, for different kinds of socioeconomic groups, right? And you can see for Africa, it's very light, right? What that means is that for most African citizens, they don't have equal opportunity to participate in state business, right? So it's in a way that is state business captured by a very small group and elite, right? And you can see here, for countries where there is very high levels of political power concentration, there is also a lot of inequality. And that's what you see on the left-hand side bar, for example. And these levels of, these levels of unfairness and, is particularly evident for small businesses, right? So, for example, you can see, for example, if you ask firms, enterprises about, the fairness of the legal oversight, right? And how, the legal processes, how their businesses are not, and the perceptions of court independence, you can see that on average, small businesses feel like, the legal, courts are not independent, and that in fact, the legal system hurts their businesses on average. And similarly, a lot of small firms report paying a lot of bribes and you can see that on the right-hand side, right? So what do we make the case for? This is the policies that I think we think, and this is sort of subject to conversation and discussion, we think will actually unlock a more transparent, a more fair, and more inclusive governance system that will lead to a system of, that leads to an economy that is both stable, that is resilient, and will offer opportunities, right? And anchoring that set of, those sets of relationships is a transparent and accountable government, okay? When the government is transparent, when it's accountable, okay, it provides the right incentives for delivery of services, right? Okay, and then it is seen to be fair and seen to be inclusive and seen to be trustworthy, okay? That will strengthen the fiscal morale of citizens. They will be willing to pay taxes, and then those taxes can be used to invest in the economy to build stability and resilience and create opportunities, right? So this is kind of the virtuous cycle of what it will take in order to be able to unlock growth and prosperity for the continent, using a particular form of governance that is particularly transparent and accountable.